Polymarket gives us the chance to turn $1,000 into $160,000 by betting on the Fed. And Lyn Alden roasts the US financial system at the Bitcoin 2025 conference in Vegas. All this and more on today's After Hours. Welcome to After Hours at TradersPost for May 30th, 2025. I'm Tom Hartman, joined tonight by Peter, Bad Guru Hartman, to dissect the market chaos. After Hours is your go-to for sharp traders focused on market commentary, powered by TradersPost, the ultimate automated trading platform. But more on that later. For now, the last week has been pretty quiet, Peter, so I figured I'd start off by asking you, how are you doing? How's your week been?
My week has been very interesting, especially last night. I watched and rewatched because I edited the video. Farmer future farming. What is it?
Futures farming.
Futures farming. John, the interview that Mike did with him on Trading Bot Sessions, absolutely fascinating, interesting. It's just interesting to me to see. Look, I guess I'm prejudicial. I have assumptions about people, didn't think about a tractor driving successful trader. All right. So this guy, very impressive. And he does the whole interview on a tractor plowing a field. Now, I've looked at a lot of videos about people talking about the markets. Never have I seen a farmer on a tractor during an interview. It was pretty badass. And then I ended up last night during the premiere chatting about chickens. So it's been a good week. It's been a good week.
So that's exactly the kind of thing that I like for trading, right? So people think about trading retail traders. You're just doing this full time. You're just sitting behind a screen and you're looking at charts constantly, and that's what your life is. But there's for regular people. I mean to say people with actual jobs to go do to they could actually go. This is a manual job. Like he's out there on a freaking tractor. This guy's not like, oh, my job is that I push buttons at a cubicle somewhere, which totally fine. Also, if you're doing that, I did that for many, many years. But he's doing actual real people stuff, and still he can trade. Right. And he could trade. And he takes the opportunity to learn in order to make money to help him and his family and those around him. And so my favorite part is like that he was like. I don't want to spoil too much of the video, but not a lot of people know that in his daily life that he's a trader.
Right.
Like he's sort of known online, but like other than his wife and maybe a friend or two, they're not walking around thinking, "Oh, this guy just made $100,000, trading futures while he was at work." They're not thinking that, but he does. He knows that it does. It's a great confidence boost. I'm sure the bank account is smiling, and he's parlaying the skill that in any other circumstance is completely useless and turn it into this. To me, it's like how the Twitch streamers, someone's like, I really like chess. Hikaru Nakamoto, I really like chess. I'm really good at chess. And I'm going to turn that into a multi-million-dollar business. Gotham Chess, he goes, I was a failed grandmaster. Let me just go ahead and turn that into, my own courses, my own thing online, travel around doing chess. You can turn lame, dull, stupid things like chess and turn it into an amazing thing, just like you could turn your trading ideas, your propensity to trade into profit. I basically stopped playing video games, right? I used to play all these video games a lot, hours and hours every week. And I was like, no, let me just play the video game of the markets, because you actually get paid for your knowledge. I did like that premiere as well. The thing that I found was super surprising was that he made six figures, but he spent six figures on fees to get there. So it's not the sort of thing like every single person you can do this and you're going to make a ton of money and it's for sure and guaranteed. No. It is a risk, and you're playing against yourself. You're playing against the market and yourself. So it's like 2 against 1. Well, it's the person you're buying and selling against, the market, and yourself all against you. So it's like 1 against 3. So the odds are against you. And when you take a shot at yourself, you hit pretty good because you know exactly where you're weak, where your guard's down, and you hit yourself right in the net. So it's pretty interesting to see someone make it out of there and be like, no. you can get out of the Maze Runner maze. Like there's a way out of it. You just gotta figure the way out. The way that he did it, like the way that he describes his trading, is like completely different than my style. Completely different than my style. Completely different than other people. So there's so many different ways out of the whole of mediocrity. It's fun. I liked it. You're right. It was a great interview.
Well, it reminds me of what you talked about. You've talked about for a while now, optionality, right? You have a lot of people, they don't realize that as you expose yourself to new opportunities, you actually increase your optionality, and you never know where it could lead. Like this guy, he started out losing 60K in options. Now, I'm not going to go out there and tell people, hey, go take your savings and dump it into options trading. But, you know, there was no way for him to reach where he is now without those risks, without engaging in that opportunity. So on some
there is a
level,
way. Some people are just good at it to begin with.
well, what I mean is, yes, you're right. What I mean is, he took the chance of exposing himself to the opportunity, and you don't have to do it the way he did and risk, high amounts or anything like that. But for the love of all things, Traders
Holy.
Post, you hear people talking about trading, and maybe you haven't started. You should start. You should be exposed to it to understand it. At the very least, it will help you to understand the timing. You talk about this, Tom, the timing of when to do things, the timing of when to ask for a raise, the timing of when to quit your job, the timing of when to buy the
Correct.
house. I feel like there's a lot of people, me included, who are walking around blind when it comes to financing and understanding the markets. Like I never, until I started working here with Traders Post, I never once considered whether or not we're in a downturn of the market or upturn, whether businesses are hiring or not, what the supply chain is doing. Like I never even thought about that. I never even cared. I just like, I don't want to be at this job. You quit that job, start a new job.
That's right.
So understanding them, in order for you to become a trader, at least a halfway decent trader, you have to understand the markets to some degree. And there's something to be said of challenging yourself to learn difficult things, or something that might be difficult to you initially, that boosts your confidence, your willpower, your determination, and your ability to achieve success. So one way or the other, whether or not you become a successful trader or not, engaging in that practice has all these downstream benefits that you're not going to get in many other domains of life.
Yeah. The one thing I would add to that, which is very well said, is this idea that you get rewarded for information that you specifically have, that you specifically like. So maybe you're not the kind of guy who wants to sit there and trade a 1 and 5 minute chart for 8 hours a day. Maybe that's not what you want. Maybe what you are is that you really are interested in the video game space. Very interested in the video game space, and you get the sense of what's coming and what might happen and what studios are doing what, because you're particularly interested in that, and you know more than the analysts on Wall Street, or the analysts on Wall Street who are doing that, who are waiting for more of a solid move before they make that bet. So you can go ahead and be like, hey, it turns out that Nintendo releases a new console every 8 years or so. We're coming up on that. What kind of thing they might like? What would be the way to express that idea? And let me go ahead and buy stock for that, or short it if you think that's the way to go. And then if it goes up, you go, hey, I make money accordingly. Versus someone else might be like, I care about Nike and Jordans, and that's what I do. That's the market I pay attention to, and it gives me a leading indicator of what's going on. In the same way, was it like Warren Buffett would go outside and go into a taxi cab and talk to them and go like, what's going on? Or the GameStop people congregated together in Reddit in order to do it. There's always a way to parlay the thing that you care about, that you know about, into money, into profitability. All right.
I want to say just one thing to Mike's credit. So I've edited in recent days, I've edited 3 interviews with Mike, and he talked to Tyler, he talked to Rebecca, he talked to John, Futures Farming. That guy is a really good interviewer, knows how to ask sharp questions, listens very carefully, and it's very satisfying to hear.
Which guy? John or Tyler?
Mike.
Oh, Mike. Yes, sorry.
It's very interesting, to listen to an interview with somebody who knows how to interview and who's paying attention and doesn't have just a list of pre-selected questions, but he's reacting to what you're saying. I think he brought out of John, Futures Farming, answers that I don't know that other people would have, and it was really helpful that John was futures farming. I don't know how to refer to him. Do people know him as futures farming? Should I call him that?
Futures
Um,
farming, yeah.
he was very open about his experience. He wasn't guarded at all, and Mike was very respectful of it, but mined him and got the information that's required. And some of the bluntness of the responses that that John gave was futures farming gave was very, very fun. So Mike, excellent job you did out there. um, your second life you should be an interviewer, or maybe in your past life you were an interviewer, because you did an excellent job there.
Well, he's given Clark Kent energy. I'll tell you that right away. All right, moving off to our first story for the week. Peter, as you know, in the vein of bringing trading and trading ideas to regular people, not everyone wants to go and open up a brokerage account in order to trade there. Not everyone wants to specifically go on a crypto exchange in order to trade. And so some people, the thing that they should pay attention to is event-based trading, right? What movie is going to be the highest grossing one inside of the box office? Which country will Trump make a deal with for tariffs first? Whatever it is, which governor is going to be elected in what state? And event-based trading, what happens is that you get people think that they have to place a bet, and then they're just betting on the binary option. Who's going to win the Super Bowl? And then they're going to bet that. But they're even in sports betting, there's different spreads that are there. There are different types of ways you could bet, multiple different ways. You can bet on different probabilities of outcomes. And what people don't necessarily know in event-based trading, let's say on Kalshi or on Polymarket, is that you can get into the bet and then out of the bet before they're even resolved. Right? So let's say you think the event-based bet is that the Trump tariffs will be completely ruled unconstitutional by the federal courts. Let's say that's what you think. But you also think that in between now and that happening, the narrative will change dramatically one way to another. Well, you can just buy and sell that narrative as it goes along, making money along the way. Or like recently with the Pope. Right? Well, the Pope, who the Pope will be. Well, they're talking about it. So you might, or if you don't like the Pope, the Jake Paul and Mike Tyson fight. You might decide, okay, I'm going to bet on Pope, on one Pope, and then as we get closer to the event, I think people are going to be more nervous that maybe it goes to another one, and I could short that or whatever, sell the or buy the underdog long. So there's different ways you can express your ideas, your information, your knowledge, the thing that you care about within these better markets. And I care a lot about Fed interest rates. I know. It's a little bit wonky, Fed interest rates. The reason I care about that is, one, is how I made a bunch of money initially, but on Fed futures. And it's just fun. It's like one of those things where the high priest comes out, tells you what the weather's going to be like for the next 3 months, and you're like, okay, it's pretty interesting. I like how everyone pays attention to it. It's something that, like, an elite person, you go to the room, you go like, oh, the Fed cut rates by 25 basis point. People go, oh, Fed cut interest rates by 25 basis point. It lets you know that you're one of them, that you even care how it affects the economy. But what bothered me is that the Eurodollar futures, which is a proxy for the Fed funds rate, the asset disappeared. I think because it was too transparent and people can make too much money or whatever, bet on it.
What disappeared?
In the market, so it disappeared. The ability to bet on Fed fund futures were gone. So the ability to basically bet on the, I don't even want the details about it because the asset doesn't even exist anymore, but essentially you can make a bet on what the interest rates would be and make a boatload of money. Like it would cost you pennies to make the bet, and you would rake in dollars, right? So that's 10 to 100 to 1,000 times what your bet is if you were right and you were able to hold it long enough. Very interesting. Well, we're back in the days where we can do that, boys, in a different way, and that's with Polymarket. So you switch to Polymarket right now, you'll see here that you can bet on what the Fed decision will be in June. Right? Will they have no change, a 25 basis point decrease, a 50 basis point decrease, or a 25 basis point increase? Okay. If you bet there's going to be no change, that's what everyone's betting. 95% that's going to be the case. You bet $1 for that, you get $1.05. Not worth the squeeze. Totally understand that. However, if you bet that there's going to be a 25 basis points decrease, that $1 gets you 21. 20x for a rate cut in June, right? So all that has to happen is something bad. Otherwise known as a tail event. Peter, tail events in the distribution curve, tail events are the improbable events that happen on the left or right. I was explaining this to somebody recently. I forget who. They were saying, well, if it's a tail event, that means it's unlikely for that to occur. So why bet on them? You go, excuse me, little baby bird. Tail events, any individual tail event is unlikely to occur. But tail events, not only do they occur all the time, more than what your little puny baby brain might understand, right? So you go, well, this was a once in 100-year flood, right? And the once in 100-year flood happens once in 100 years. But once in 100-year floods happen all over the place all the time. Because it's a once in 100-year flood there. So you might have 3 100-year floods in the United States in a given 2-year period, right? It could happen. Just because the event is unlikely doesn't mean that it's unlikely that it'll occur at all.
Right.
More than that, you could have a 100-year flood. That's improbable. Then you could have lightning hit your home, which is improbable. And you could have a burglary, which is also improbable. That happened to you all within a month, right? Because the flood made it so that whatever the pull for the lightning thing is gone and they get hit by lightning. And because your house was hit by lightning, the thief is like, well, I'm going to go into that house because like the alarm system's going to be off, right? You can have all these situations that occur that cause this unlikely event to occur. So I'm explaining it poorly. Go read Nassim Taleb's book, whole series, the Incerto series about anti-fragility and black swan events and all that sort of thing. And you'll see that you can bet on the fact that improbable events will occur is a sure bet, but betting on specific ones are not.
This is Nassim Taleb, you're saying?
Nassim Taleb has a series called the Incerto series, Black Swan, Anti-Fragile, Fooled by Randomness. I forget what the Procussion's Bed, and I can't remember what the other one is. I think there's a 5th one.
Gotcha.
So why am I bringing this up? It's because the Fed cutting rates is a response to some tail event, right? But it doesn't say what tail event that tail event has to be. Just that it's a tail event that the Fed needs to respond to, right? And that response, that those weaknesses, the probability that a tail event will cause a financial shock that causes the Fed to cut rates usually happens once in 4 periods of the year, at the 4 options expiration periods. So around March, around June, around September, around December. Those are the 4 periods of time where if there's going to be a thing, it's likely going to happen there. And if it happens over there, then the Fed is likely to cut. A 20-to-1 return on a bet like that is better than almost any bet that you're going to take inside of the stock market. Like if you take an options bet or whatever, almost better than any of those because it's so little money down for the potential gain, right? I'm actually surprised that it's priced in at only 5% because tail events are just that. They're just tail events that could happen. It's sort of like the when you're buying options, the option is cheapest when you would want to buy it the most, where you get the best odds. Like the odds that you get on options contracts depends on how much you're paying for it. So if people think that tomorrow the stock market might drop, most people think that tomorrow the stock market might drop 50%, the cost for that insurance contract is high because everybody thinks it might happen tomorrow.
Mm-hmm.
But if you bought that options contract 6 months ago, it might be, so you might pay $100 for that contract, that might pay you $200. But if you bought it 6 months ago, the options contract, when no one thought that in 6 months plus 1 day there'd be the drop, you might buy that options contract for $1. So you make 200 times your money if it happens. So the contract that gives you the most payout at the time you need it costs the least when no one wants it. You're like, wait, why would I do that? Anyways, so this.
Well, no, but
this
I mean that's really good. Like what you're talking about is, think ahead, buy it at a discount. I mean, it's not a discount. I guess it's the price of what it is at that time. But this is in line with the other thing you were talking about. When everybody's on this side of the boat, you need to be on that side of the boat.
That's right. If you're going to be if you want to make serious money, if you want to eke out 10% compound interest over the quarter after quarter, no problem. You can totally do that. That's not your boy Tom's play. I'm assuming to the fences. All right. That's the kind of thing that I like. Those are the stories I like seeing. So the 20-to-1 return is on 25 basis point cut in June. If you bet that same dollar on 50 basis points, it's $166 return. That's 166 times your money. That means if you bet $1,000, you make $160,000. If you bet $1,000, you make $160,000.
I'm on it.
Okay, so you say, Tom, but the odds that it's going to happen in June are super low. Totally understand. So the idea is that you want to spread this bet out. You want to do it in June. You want to do it in July. In July, you have a 3%. So $1,000 will get you 31,000. You want to do it in September, where it's again the same thing. And you can set your limits to be able to buy it when it spikes, and you can get it at a better price, right? This is just a 3% versus 1%. So you can just set your stop limits, right? You can spread your bet around in such a way that you're actually buying $1,000 worth. You could put 3,300 on this one, 3,300 on the second one, and 3,300 on the increase, right? And this increase one, if you're right on that one, your $333 will give you $83,000 if you're right. So you can say, I'm going to allocate $1,000 every month to this bet, and the only thing I'm not going to bet on is that there's going to be no change.
Can I do this in Canada?
That means if you... Yes, it's actually hard in the United States. You can do VPN, but whatever. You're not supposed to use the Polymarket in the United States, but let's not here or there. It's crypto. So if you say, okay, I'm going to allocate between now, is it June, July, August, September, October, 5 months. I'm going to allocate $5,000, $1,000 a month. And I'm going to split $333 for all the bets. That's no change for the next 5 months. What would happen if the Fed did have to cut rates? Well, head over to your friend ChatGPT and it'll tell you. You paste the odds into your buddy and you say, okay, what'll happen in the different circumstances? Well, under no change, you would lose $1,000. You'll lose $1,000 a month for the 6 months. So you lose $6,000. But you have a potential of gaining anywhere between $50,000 and $82,000. Even more if you decide, I don't think the Fed's going to increase interest rates. Let me just go ahead and put it just on the decrease. You could even win even more. So you can make between 10 times your money, or nearly 9 times your money, and almost 10 times your money on a $6,000 bet. So you might ask yourself, well, how many times do I want to spend $6,000 to do that? Well, there's plenty of people who lose $6,000 in markets, Peter, who are going to lose $6,000 in markets over that period of time with worse odds.
That's true.
They're going for double their money, and they're going to lose. They're going to lose $6,000. You right now, you watching right now, and you're betting, you're trading in the markets, and you have $6,000. You're going to lose that $6,000. It's gone. So it's already gone. So you might as well put it on this bet, right? You might as well put it on because it's not even $6,000 up front. It's $1,000. Peter. If these people are already going to use a VPN in order to get onto Polymarket in order to make this bet, what, they can't sue me for a thing. They can't do anything to me.
I don't care what you say. It's not financial advice.
So it is financial advice, and I am your research. Oh, that's true. For TradersPost. It's not financial advice. Don't do this bet. It's a terrible idea. Yeah, in fact, you're definitely going to lose the money. You'll lose the $6,000 and probably more in a way like I don't even understand. So just assume that and don't think about it. There, covered. But this is the type of thing I find interesting. This is using your interest, using your market knowledge in order to find things. Now, I'm using this one, but there's, if you are of a lesser mind, you can bet on like box office sales. What movie is Lilo and Stitch gonna beat out The Incredibles or whatever the heck is going on in movies nowadays? And if you're a sports ball player, you can do the sports ball thing over here. And if you're wonk for music, well, then this concert stuff. Go ahead, make your money, get out there, make your bread. Super fascinating. I love stuff like that, Peter. So $1,000 can make you $160,000 if you're a DJ like me. You put it all on black for 1 month. Go ahead. And if it happens, name your second child after me. Thank you very much.
I might do it.
Great.
I might do it.
You can put as low as $1. If you just wanted to do it for fun, you could put $10 a month just for the fun of it. Take your wife out to dinner and have some fun, or your husband. I don't know, or buy him a console, buy him a PS5 or something like that. That'd be fun. Okay, so that's it for that. There. It's an interesting bet, Peter. Interesting bet.
It is.
Next up, Peter. Bitcoin Conference 2025 happening in, I believe, Las Vegas, Drittler, right now, at this moment.
Yeah.
And Lyn Alden roasts the U.S. financial system in a very eloquent way. I thought it was very good. Lyn Alden, I found it to be, I've been following her now for years, and
It's great.
she has no like obvious bias. She just says whatever it is. And her coming to this expectation that Bitcoin is going to be like one of the assets to actually own, like if not the number one asset, was slow coming. Like she did not like just jump on that train right away. It took her quite a while before she did that, quite a number of years of research until now she's to the point where she's standing on stage, standing on face in front of the cult of Bitcoin. Totally deserved, totally understandable. So I thought you should definitely go take a look at this video. Actually, I sent it to you, Peter. You can post it in the chat. You should go definitely take a look at the full video. It's only a 20-minute talk, as these events are. Peter, you remember these when we were at the Consensus 2025? You were surprised how the talks were. That's how it is. 20 minutes rapid fire, but she does a great job. And I just wanted to spotlight a couple of segments from her talk that I thought was particularly worthwhile. Actually, I have to change the audio. 1 second. All right. So let me know when you're ready. I'll go ahead and play the first one. So I'll just play these 3 clips. So stop in between, and I'll tell you what I think it's interesting.
Let's do it.
Decades. We're entering kind of a new era. So that's what the deficit is. But the second main question is, why does it matter? Why are we talking about it here at a Bitcoin conference? And the short reason is because it matters for asset prices, especially anything scarce. So this chart shows in the gold line is the price of gold, and the dark line, the black line, is real interest rates. And again, we've historically seen that there's been a very strong correlation between these two things. And so for those that don't know what I mean by real interest rates, this one is specifically the 10-year Treasury yield minus CPI inflation. And the reason these two charts, gold and real Treasury rates, are so worth comparing is because they're the two primary reserve assets globally. They're the ones that compete with each other at that scale. And gold, of course, is pretty scarce. The supply grows by an estimated 1% to 2% per year, but you don't get paid any yield to own it. If anything, you incur an expense for storing it. Whereas Treasury yields, dollars and treasuries, they grow at a much faster supply growth, but then you get paid this yield to own them. And during periods where the yield is rather high compared to measured levels of inflation, some of the investors that might otherwise buy gold get enticed to come back to the dollar and the Treasury system. But then during periods of time where the yields are not high enough compared to inflation, many investors flock to gold. They basically say, if I'm not going to get paid anything on my treasuries, why would I own treasuries that are way more abundant than gold? And historically, this has been a very strong correlation. High real rates means higher gold prices. And on this chart, the real rate is inverted. So lower means higher real rates. And again, as you've seen over the past several years, this one in particular starting around 2022, we've had a complete decoupling in the price of gold and real rates. There's something new is happening here in this kind of fiscally dominant environment. And of course, this is relevant for Bitcoin. A lot of people, if you would have said 5 years ago, if interest rates are 4 or 5%, would Bitcoin be selling out massive conferences in Las Vegas, and would it be worth over $100,000 per coin? Most people would say no.
So I was one of those people. I was one of those people that said that Bitcoin, essentially the Ponzi scheme is relying on 0% interest rates. And once people are able to get 5% interest on their bonds, or there's an indication there's a problem with the infinite money glitch, that the asset would sell off just like with anything else. Totally wrong on that. Not only did gold go up, Bitcoin went up. The idea that Bitcoin went from 17,000 to 111,000 amidst the greatest inflation we've seen since the 70s blows my mind. And it's not because Bitcoin is an inflation hedge, right? Even though it is acting in that way, not exactly, because as inflation goes up, gold is not going up immediately. It's because truly it's an alternative to the financial system, right? So she was just describing here that the idea is that with real interest rates, as they become as inflation keeps into real interest rates, it makes it so that, well, why would you buy a bond where you're going to lose money on, and the value of the bond doesn't go up? I might as well buy gold, that even though there's a cost to owning gold, it maintains the purchasing power of the dollar, right? That's why gold is going up. But there's a case to be made that this is the reason why people go into there is that there's already this history, this mechanism to switch from bonds to gold. There's already a process, people are already used to that. But there's more of there's a beginning process of people switching to Bitcoin, because not only do you get the purchasing power protection of the asset, you get that gold has, you get price appreciation.
And you don't
because
have
of the
to
scarcity.
incur an expense for holding gold.
Yes. Yeah, exactly. Not the same expense, and there's all kinds of other, safety, ease of easily transported, easily given to somebody else, relatively easy, and all that sort of thing. And then like the downsides that people have for it takes half an hour instead of instant settlement. You go, okay, fine, gold is along with that. You ever try to ship gold from London to New York? Not exactly easy. 30 minutes of Bitcoin transfer is barely a problem for that. They'll go, well, someone could coerce the keys from you. Yeah, that happens with gold as well. People could steal the Bitcoin from you. Yeah, that happens with gold as well. So like all these
fake gold.
You can get fake gold, exactly. Which happens. There's more people now with fake gold. Way more people now than you might think. There's a huge percentage of that where they think they have real gold, and sometimes it gets traded as it's real gold because like there's a seal on it, or it goes back and forth, and it might go through 20 people before anyone even breaks that open and sees the chocolate inside. It's pretty interesting. So the idea here that the Bitcoin is still going up even as inflation is going up, to me, is super surprising, and is like, if you needed evidence that it is actually being used as an alternative, like that's your evidence, right? It's not going up to 100,000, 111,000 because of retail traders. Like that's not what's going on. In the same way that it's not retail traders moving gold and bond market. People are just ridiculous when they think that, oh, people are putting their money into gold assets. No. Institutions, pension funds, sovereign wealth, they're putting billions to trillions of dollars in these assets and not moving gold in the bond market because Mima and Nona are putting some money into into U.S. treasuries. That's not happening. Okay, it's big money that's moving these things. All right, let's move on to the next clip.
Happening now, and the reason this turning point really matters is because when we look at what the Fed, what their tool is to control credit growth, it's mainly interest rates. If they want to slow down the economy, slow down credit growth, and try to slow down inflation, they jack up interest rates to try to make borrowing less attractive. On the other hand, if they want to accelerate things, they tend to lower interest rates. The problem is that, many decades ago, when federal debt was low and most of the money creation was coming from private sector, whenever they raised interest rates, they would slow credit growth. They would slow the private sector faster than they would blow out fiscal deficits. The problem now is that now that they have over 100% of GDP, which only happened in recent years, when they raise interest rates, they ironically increase the federal deficit at a faster pace than they slow down private sector credit growth. Basically, what that means is they don't have brakes anymore. The train, nothing stops this train because there's no brakes attached to it anymore. Or another way of putting it is the brakes are heavily impaired. We've kind of gone through the looking glass. We're in Wonderland now, where the rules that worked for the majority of this time frame now work backwards. They don't really have a way to slow down total credit growth in the system.
Okay, so I love hearing stuff like this, Peter. As I try to keep reminding people, as unpalatable as it can be, the financial system that you are in, that we are all in, is doomed for collapse, which is great. Because as long as you know that that's what's happening, you can plan for it. Just like when they have the sirens and the tornado warnings, you go, okay, I'm in Tornado Alley, but I know what to do. It's when a tornado hits and you have no idea that the tornado could even have happened. That's where it's a devastation. Or to put it in a different way, if there's a wave coming to the beach, you can surf that wave and get the biggest thrill of your life, or you can get deep impact and then you're out of there. So silver lining, profit to be made in the collapse of the global financial system.
Right.
Now, if we didn't have an alternative, then we'd be like, hey, it's really problematic. But there are the to keep it in deep impact terms, the silos where the chosen people can go to in order to be safe. And when the waters receded, we can rebuild. We can rebuild. And financial markets are the only way you can make it through. Right. This is why I find it so important for people to be literate within these markets, to want to be able to read what the weather's going to be like next week. Winter's coming. Strap on. Get your food ready. Get your hearth ready. Get that fire ready. Cut your lumber. Winter's coming, and to be able to read the markets is one thing. Then to be able to take advantage of it in whatever way suits you is another. Squirrel away those nuts for the winter, little squirrels. Okay. I don't know why I keep referring to the regular people as small woodland creatures, but that's what they are to me. That's what they are in my heart. Because if I see a squirrel in the street, I try not to crush it.
That's true. But if you see a person, you go full force?
Obviously, a homeless person, I walk right over him. What do you do?
Disavow.
All I'm saying is that this is happening. So she's describing the Fed was hitting the brakes all the time, right? Gas brakes, gas brakes, gas brake. But the brake, the increasing of the interest rates, don't work because they increase the interest rates, which means that the interest on the debt increases. And they were doing that in order to prevent credit growth because they wanted to prevent inflationary effects, but they can't. The raising of the interest rates actually causes more inflationary effects because the government has a higher interest rate bill to pay. In order to pay it, they have to print money. So they can't stop it, which means we're in the end game, right? Or in terms you might understand.
Is that
what this is Doctor Strange when he's trying to stop the water and then he's pointing to Tony Stark and he goes, one.
Yes. I get it. Yeah. You nailed it.
I got to cut myself into all those movies and have clips of those. You know what? That's exactly what I'm going to do. That's exactly what I'm going to do.
Wait, so did you just describe, is that stagflation?
Well, it's stagflation for a period of time until the system collapses. Then everyone who's prepared gets to go to Elysium and everyone else stays on Earth.
And how is this different? I understand the Bitcoin element, but how is it different than what Peter Schiff keeps saying?
It's not different. What Peter Schiff keeps saying is that the dollar will collapse, which is to say the same thing as the sun will go out. Yeah. Obviously. All currencies will collapse. All fiat currencies will collapse. But what this means is that, but he's wrong in that Bitcoin, a scarce asset, becomes more desirable in the situation, not less. He goes, well, it's only valuable insofar as you can redeem it for dollars.
Right.
You go, yeah, insofar as you can redeem it for dollars, it'll be worthwhile. And until that happens, it'll skyrocket. But so will dollars. Dollars will also skyrocket, right? In an inflationary world, you need more dollars, right? Like, I don't get why he finds it so hard to understand. He thinks it's inflation the way like the Zimbabwe dollar was. that you have to have a wheelbarrow of dollars in order to pay. It's not that kind of inflationary yet. It's inflationary in a different way because it causes slow growth, which means everyone's scrambling for the dollars that are there. And so it can cause the dollar to crash up, it can cause gold to crash up, and it can cause Bitcoin to crash up. These are all bad. But I'd rather be on the bad where I have gold, Bitcoin, and assets than on the other side. Because when the government and the central banks come out to save anything, as we saw in the global financial crisis, as we saw during Brexit, as we saw during the .com, what they're going to do is more cowbell. What they want to do is make sure the stock market goes up and to the right. That's it. There's nothing else they're going to want to do. And if they have to price fix the assets at a higher level, that's what they're going to do. Okay? That's exactly what they're going to do. Okay. Wow. I'm going to play this last clip and then because we talked about
that's the math that we find ourselves operating in, and that's the big contrast that we have to Bitcoin. So for my last slide, we don't have to focus on the details here, but just by looking at the shape of these charts, these are century-long charts. And so my main point with these charts is we've actually seen this story before. We've gone through something like what we're going through now in the US one time in the past, and that was around the 1940s. So the reason that debt growth is so smooth historically,
the last fourth turning,
is because when they do finally run into something that actually challenges it, they rotate the whole system around, and we're going through it for the second time. So basically, you have a private debt bubble buildup, and then you hit zero interest rates. So you can't keep adding more and more on to the accelerating private debt growth. And then what happens is you find yourself levered 50 to 1, and you start to unravel. And how do you unravel a system that's levered 50 to 1? The short answer is you don't. You just print more base units, is how they always handle it. So what that happens, they switch over to federal debt growth, and they switch over to running massive federal deficits, so that even as private sector debt levels eventually kind of mellow out for a period of time, it keeps growing on the public side. And that tends to be more inflationary, and that tends to be more persistent. Because as we get to the point that I mentioned before, when the Fed raises interest rates to try to slow any of this down, they blow out the federal deficit at a faster rate than they slow down bank growth. So basically, we're completely off the tracks now. And notice nothing I said is anything about Weimar, nothing's about hyperinflation. It's all about basically long-term, unceasing 7% deficit growth. We're not talking about 70% deficits of GDP, we're talking about 7%, but it's every single year like clockwork. It's the relentlessness of it that matters. And so as we go forward, this is the system that Bitcoin's going to exist in. And if we kind of summarize this whole talk, all these charts, all these points, there's two main reasons why nothing stops this train. One is math. The way that they've constructed the Ponzi system that I've talked about before, the way that it has to always continue growing to ever not start deleveraging in the crazy way that it would. So that's the system that they've built. And two, the second reason is human nature. None of us want to pay higher taxes. People that are on the receiving side of deficits never want to cut them.
Beautiful. Very interesting. You can listen to that forever. You guys go take a look at that. We're going to actually, before we comment on that, let's just go ahead and get a word from our sponsors. Because got to pay the bills, buddy. Got to pay the bills.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. TradersPost lets you automate trades using signals from tools like TradingView or TrendSpider or even your own custom setup. It works with brokers like TradeStation, Tradeovate, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, adding more strategies, plugging into prop firm accounts, or juggling multiple portfolios, TradersPost handles it. It's built to grow with you. Start your free trial at TradersPost.io. Trade smarter, automate your edge.
I think when I live in a house and like call it Traders Post Hearth, because oh, we're back. All right, so that was fantastic. Go take a look at Lyn Alden's video. it's within this longer 8-hour one, but it's a tweet. Actually, I'll share out the tweet on the TradersPost account, so you can go check it out. But the trade there is like, there's all kinds of setups there that as a trader you can take advantage of. Whether that's Bitcoin, you're going to hold that, no problem. If that is, you're going to short bonds until it gets to 7% on the 10-year, that's a trade. If it's, hey, when interest rates are 7%, there's going to be products that are structured in order to take advantage of that 7%, that might compound the 7%, like 7 and 7 and 7 and 7. You might be able to get 30, 40% because we might have 7% for a few years. And if it's going to be at 7% or lower, well, then you could structure products that have upside as the downside, and then you make money over time. There's all kinds of things that can happen if you know that this is what the weather's going to be, right? So if it, even though it's going to be unseasonably hot, the guy in the winter who's stacking up on air conditioners, he's gonna make out like a bandit. And you want to look for setups, look for trade executions that you could buy now, like the options thing that you could buy now that are cheap now, that'll pay out later on in that circumstance at a higher rate than it would if you made that decision then. So, but you want to know that these are the dynamics that are going to be in play. And if you do that, well, hey, was that in Ventura?
Yeah.
Hey, what's up? What's up? It's nice to see you. Yeah, fantastic. We're just singing the praises of Bitcoin, which, to be frank, I thought it is a Ponzi scheme, but as you all know, I'm for Ponzi schemes. So thank you very much for watching. Peter, those are the big pieces of news for the week. But some news aren't for the daily charts. Some news are for the minute charts. So what's the market minutes for the week?
Market minutes.
Segue. I'm going to have to remember that for next time.
Broad market and macro events. President Trump postponed a planned 50% tariff on EU imports, sparking a sharp rally in equities early in the week. A U.S. appeals court temporarily reinstated some Trump tariffs on Thursday, injecting renewed volatility into trade-sensitive sectors. Major indices rebounded after last week's losses, with the S&P 500 and NASDAQ each gaining 0.4% on Thursday, but finished the week well off their highs. Treasury yields fell.
Yeah, we'll look for a topping pattern here for the next couple of weeks, next couple of months. I wouldn't be surprised to see maybe tip into all-time highs sideways, or higher, lower highs until we get a crash in September, October. If that happens, there's money to be made there.
Treasury yields fell as a solid $44 billion government bond auction drew strong demand, supporting a rally in treasuries. The S&P.
Yeah, you think the Fed wants another secret buyer, mystery buyer this week? No. Participate directly within the primary market. $44 billion. All of a sudden, what was that? That was a 30-year, I think it was. I'm not sure.
I don't see it here. I don't know. The S&P 500. Go ahead.
Yeah, I was about to read it at the same time as you, as like an echoed voice.
The S&P 500 hovered near key technical support zones, with traders closely watching for a potential breakdown below 5,760. Earnings and corporate moves. NVIDIA's earnings report was the week's centerpiece, with shares jumping over 3% after the company posted a massive revenue surge on booming AI demand. Sector and asset class
I don't get out
highlights.
of bed for 3%. Thanks.
Sector and asset class highlights. Utilities attracted defense inflows as investors sought safety and ongoing tariff and macroeconomic uncertainty. Natural gas prices surged to multi-month highs, driven by unseasonably cold weather and storage concerns. Bank stocks remained under pressure on economic slowdown fears, with JP Morgan Chase and Citigroup both declining over 1%. Tesla extended its losing streak, closing at its lowest level since November and erasing most post-election gains.
Brutal.
Crypto and alternative assets. Bitcoin fell below 106 and Ethereum dropped 4% to 2,616 as renewed macroeconomic and geopolitical uncertainty weighed on digital assets. Major altcoins, including Dogecoin and Shiba Inu, posted steep losses of over 7% each. U.S.-listed crypto investment vehicles saw their fourth consecutive week of outflows, with $867 million withdrawn last week and $4.75 billion over the past month.
So that's it for the market minutes. Before we leave for the day, I do want to mention here that Bitcoin is doing a dip. It's doing a little dip, headed down to a lower level, which is totally to be expected. This is something we, I believe, called out last week as a possibility. And so the question here is, are we going to head down to lower levels? Let me just share my screen real quick before we go. So we're down here. There are levels that are available. Essentially, Bitcoin could fall all the way down to 90,000 or so, and still be in a bullish trend for this period. And that's not like crazy, right? That would be a 20% drop, which is totally normal. 20% drops in Bitcoin, even during bull markets, are de rigueur. So look for that. I've been looking for, Peter, this triple tops. People calling triple tops on Bitcoin. Love it. But as we just saw from Lyn Alden, don't worry about higher interest rates. That's not going to stop the train here for Bitcoin. And in an environment where there's not a lot of performance to be gained, money chases performance. And so it's one of those things where, as you get down to a worse economic situation, the highest performing assets get the most of the liquidity.
Well, looking at the liquidity there, we're going to be heading into a little bit of a dip, and then it's going to be going real up.
That's right. We have this dip here that's going to happen all the way till like June 16th or so. And then after that, blue skies, baby. Blue skies. So I'm looking for, if you're going to be buying Bitcoin right now, you want to be buying the dips around here. So this is a good dip to buy. If it breaks down even lower, buy it there. And essentially buy it every week until we get to whatever this number is going to be. Over here, it'll be, 120 to 140. It could even be higher than that. And right now, its peak in liquidity is peaking in August 2025. But who knows? There's some reports that it's going to go even further than that. So I don't see anything that's stopping the Bitcoin train until we get much higher. Do your own research. Not financial advice. I don't know what I'm talking about. Bitcoin's going to zero. Peter Schiff forever. Anything else, Peter?
Do you have any plans on what blueprint is going to be?
I have grandiose plans. What we're likely going to do is another video, but I think what I'm going to be starting to do is do live stream blueprint, like not blueprint, I'll call it something else, where I'm preparing the blueprint episodes over the weekend. It'll probably be Saturday or Sunday, and I'll do it from like 10 to midnight or something like that, and just live stream, getting the ideas out. Because sometimes in order to do blueprint, I have to do like 3 things before I even do the blueprint episode. So might as well film all those, make those content, and then have blueprint be like a little bit more of a polished thing, just like the supercut version of the live stream. And then it's not so embarrassing for me and stressful for me to be on stream, which I like, but I don't know how much other people like it. And gives us time to get clips out and stuff like that. So it'll be fun. So no guarantee. I told Mike I'll try it for a couple of weeks. If no one shows up, doesn't matter. I don't care. I never needed an audience to say anything. I'm perfectly happy to entertain myself. But if you want to be there, check us out on YouTube and on Twitch. And I'll tweet out the details for when I'm online. All right, that's it. It's fun. Check out Polymarket. Use AI to make those bets. You can just feed it the markets you're interested in and go like, hey, look, I have $1,000. What can I do in order to maximize my profits? I thought I was going to make money on the Pope winning, just as a cautionary tale. I did bet on 8 of the popes, but it turns out Prévost won. And I never heard of the guy. That's it, folks.
Well, just before that, check out the Trading Bot session interviews. They're live right now on YouTube. You should definitely check it out. That last one is, look, you want to hear a guy talking about trading and making 6 figures and spending 6 figures and all that.
While the 3 last ones were great.
Yeah, they're all great.
All of them are fantastic.
Check it out. And great job there. Like and subscribe, everybody. And yeah, that's it.
All right. Have a great weekend and happy trading.